Hey folks, how you doing? Hope you're doing well today. It's Monday, June 29th. I'm going to put together a little clip for you demonstrating a couple of trades, and generally what I did was I edited a couple moments of me talking during the trading session, and I'm going to play that back for you. So generally, yeah, we traded the NASDAQ today, and I had 34 trades in total. So you can see right here down there, the June 29th, you can see there are 34 trades. I had a huge drawdown in the morning actually, and then I managed to recover with a whole bunch of winning trades afterwards. And generally, I'm not so happy with my trading performance, but what is interesting is how I started off the day with 5 losers, and it was basically the same pattern over and over and over again that I traded. And the pattern that I traded for 5 losers in a row was really interesting, because when you analyze it from the other perspective, you can see how it could have easily been 5 winners in a row if you were trading this, simply trading the other side of that trade. And again, it happened during a wedge formation near the lows. So I'm going to talk about the psychology of wedge formations a little bit later in the video. And if you have anything to add, please leave a comment in the video. So I'm finishing the day slightly red in this paper trading account, but anyhow, what I'm more focused on is the win rate and kind of just these high probability setups. So I find there was a lot of opportunity for quick scalps today. If you kind of were thinking from the stop hunter mentality, we're going to go into it and I'll analyze a few things.
Order filled. Order filled. Order cancelled.
What a stop hunt that was. Knew that was coming. During all this nonsense, there was not any buyers. There was barely any buy orders coming in. Price was just chopping up and down on retail, and I saw a couple of block sells come in near here. We saw this pop with no follow through, and then we were just kind of chopping, and then I said, you know what, let me grab this short. It seems pretty high probability. They were defending those resistances, and sooner or later we go down and stop hunt these long traders. Okay, it also makes sense that if you look at this on the 2-minute chart, we were near our exponential moving averages, meaning that we're in a decent area to go long because the market's in an uptrend, you see. But that right there set up a good long trap because it was right near the moving average. A lot of traders are looking to buy that, and that's what set up the good trap. So now we're breaking to a lower low, and we'll see how much fall through we get. There's some block orders coming in, potentially some demand down here. That's the pattern I got caught in earlier. It happens a lot, especially when the market's trending.
Order partially filled. Order filled. Order partially filled.
Is when the selling just sort of dried up. And I'm going to go back and watch that. And it was right around here, around these low 30s, where we traded down here. And you can see there's a lot of blocks of selling. But we couldn't trade below that. And since we couldn't trade below that, well, actually it was here. In the low 30s near the VWAP, you can see here there's a lot of selling, but then especially here around the 35s, there was a lot of absorption. Boom, 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 boom. Because we couldn't trade lower than that, well, that kind of gave fuel to the bulls to push it higher. So this only became relevant when we were not able to trade below it. So that's kind of the secret to order flow, is that look for order imbalances and then look at where the price trades relative to those order imbalances. I'm gonna have to write that down. Anyhow, so here, yeah, this is a nice little trap here. So you can see right there, a nice bullish engulfing right at the end of the bear trend, fails. Then you can see a little pattern here. We come up to maybe break these highs by not even a tick, meet up with the moving average, kind of bullish, got a little tail and everything, it fails. We break the low by a tick, then we come up and bounce for another lower high. We come up again, fail, and then move lower, and then fail. This is what you call a wedge formation, right here. And it happens quite often. It's where you're seeing either higher highs with not much follow through, or in this case, lower lows with not much follow through, and every time we bounce, we get sold. So it means that somebody's sitting here selling into these offers as it pushes higher, and it traps out the long traders who try to enter here calling a bottom. The long trade only worked once we attempted here and there was not enough selling. And again, it was around this area, this 97.30 area, where we got that support. That was the price that they agreed was the lowest point they were willing to sell at. And then the price rallied from there. And you can see how when it rallies, it just doesn't stop rallying. It just holds the 4 EMA and just keeps rallying. And I've seen that pattern many times. You can see here we have a light pullback and then go for the second leg right away. And the second leg is much more aggressive than the first leg. Came up straight to the VWAP with a higher high, and then we pull back into the trading range for a failure. Catch out any of these late longs that entered here, and then we continue in sort of a trading range here and then move higher. And again, now we're seeing this sort of formation here again, which would be another wedge formation where we're seeing higher high breakouts. Now remember, we're approaching the higher part of the range now. We're going to see how the buyers and sellers are interacting, and we're seeing how we're moving higher, not a lot of follow through each time. So you can see here higher high, chop around, and then try to break lower, fail, and then massive push up into a failure and stay in the trading range. And then again we have it another time, massive push up, try to stay in the trading range. Again another time, and then a massive push up, and then that time we broke out of the trading range. Now this right here, a wedge formation, what a wedge formation does, according to what I've been seeing so far, is that a wedge formation is likely to occur approaching key price areas. So in this case we were approaching resistance. We're approaching the previous open of the day, which would have been around where we opened was 98.50 on the NASDAQ. So we're approaching the price that we open, and that makes sense to see some sort of resistance. But the thing is that the psychology behind a resistance is that a lot of traders are looking to sell right at resistance. What makes sense in this sort of pattern is that since the resistance is right here at 98.50, a lot of traders are going to be looking to sell at that resistance. And because a lot of traders are looking to sell at that resistance, the people with the most money know this, and they're going to be looking to pop this thing and catch their stop losses if they keep their stops too close, you see? And this is what causes a wedge formation. So people that are trying to call a top of the move, they often get stopped out of here, and then again it pulls back, they get stopped out another time, and then it pulls back again, and then it's unable to trade lower at this point, and then sooner or later we pop massively after an attempt to move lower, break by one tick, and then we pop again, and then after this the shorts are trapped, and then once the shorts get trapped, then it becomes a better risk to reward to actually short the thing for a little failure here of a pullback. So that's sort of the psychology behind wedge patterns. And if you look at this one as well, so approaching, what was the level here? Okay, so the support I had marked on my NASDAQ chart was 97.8675, which was the low of our hourly trading range from a long time ago actually. And we haven't traded this low in a while. So basically we were in bear territory down here today under the 97.80s. Once you start to see wedge formations like this, it generally signals that bears in this case are getting somewhat exhausted, but at the same time there's still more people waiting to sell these rallies here. So until there's nobody left to sell the rallies, then the thing is going to keep going down on those rallies. And again, it's the same principle here where we have, after our impulsive moves down, we have this one which should be considered a failure. It gets sold into because right here this is too obvious. That's way too obvious. You can see it got tested, and then another time that got tested, and then another time that one didn't get tested. So how many attempts here? So let's say you tried to go long here. 1 attempt, fail. 2 attempts, fail. 3 attempts, fail. 4 attempts, fail. And 5 attempts. You would have had it right on the 5th time here. And you can see here, after we finally were able to push above these resistance points, that was when the shorts started to give up here, and we saw this thing kind of let up. So wedge breakouts are important, and wedge formations in general are important. And again, they tend to happen approaching key areas, either approaching them or after the levels have already broken. So in the case of today, we were into some support down here. Once we started to reach a point where the sellers were not willing to sell at this price anymore, that's when we started to see a break of this wedge and traded higher. And likewise, when we moved back up to the 98.50s, we had sort of a wedge formation consolidating up here because a lot of shorts were trying to call somewhat of a lower high over here. But in fact, that was too obvious, and that's why we kept seeing shorts get squeezed out with higher highs until we finally saw the bulls arrive in full force to squeeze them all out at once. But again, it took a while to develop. That's why it's important to understand how these patterns are developing in the market. Alright guys, if you enjoyed the video today, please leave a thumbs up and subscribe to the channel. I will catch you tomorrow. Alright, take care. Bye.